Hello and welcome to Between the Lines, the podcast that dives deep into the stories redefining the Asia-Pacific reinsurance landscape. Recorded here in the newsrooms of InsuranceAsia News in Hong Kong, I'm Mithun Varkey, Editor-in-Chief for InsuranceAsia News. And in this episode, we'll bring you insights into our stories on the Qantas breach last week, Vietnamese insurer PVI's strategic plans, updates on the unfortunate Air India crash last month, and as always, we'll bring you the hottest leads that the InsuranceAsia News editorial team is reporting on. Today's special guest is Tom Oostra, Managing Director of MSIG Specialty Marine. We have in store for you a very engaging conversation on the specialty carrier's recent rebranding, APAC strategies, as well as the broader marine market.
I think one of the global trends is that vessels are getting larger, but also more complex. So your simple container carriers are getting larger and larger. From an insurance perspective, that means there is more cargo on board from different owners. So you have a risk aggregation challenge. And that can sometimes lead to complex loss scenarios. There's also been a trend in the industry that fires on board have been, increasing over the last years. So if you get a big container vessel that is on fire, that is a very big challenge and more challenging than it was a few years ago.
Today I'm joined by Deputy Editor Andrew Mullen. Welcome, Andrew.
Good to be back as always.
And Joana Nguyen, who's had a very busy week writing some stellar stories that we'll be diving into this podcast. Welcome, Joana.
Thanks for having me. I've got a lot to talk about.
So let's start with the latest story from you, Joana. An interview with the chairman of Vietnam's biggest non-life carrier, PVI Insurance, and a scoop on their plans for Hanoi Re, their reinsurance subsidiary.
We were very fortunate to have a chance to interview the chairman of PVI Insurance, Dương Thanh Giang. So he shared with us a lot of interesting details. One of them is Hanoi Re, a reinsurer backed by PVI Holdings, which is also the parent company of PVI Insurance, is having a business expansion plan in order to boost its AM Best rating to A-, similar to the rating of PVI Insurance. So it's looking for a strategic shareholder, not for money, but for more businesses. So the ideal suitor would be an insurer or reinsurer who can bring existing business to Hanoi Re, because at the moment, Hanoi Re is depending too much on the domestic market as well as PVI. And, with many foreign enterprises from China, South Korea, and Japan increasingly investing in Vietnam, the chairman thinks that Hanoi Re would have more opportunity with insurers from those countries.
Yeah, speaking of opportunities, there's a lot of general investment going on in Vietnam. We're talking about railway lines, metro lines, nuclear power plants. Obviously, PVI is involved in all this. How are they navigating this landscape?
Exactly. That's what PVI Insurance is doing at the moment in order to stay ahead of Vietnam's development. So the way they do it is that when they know that the contractor of those projects, can be Chinese, South Korean, or European, they would go there, visit the top 2 to 3 biggest insurers in those markets, and then tell them, if your clients are selected to become the contractor, we are happy to support you with local insurance policies to be issued. This is because PVI wants to become the insurer of choice for all FDI into Vietnam across all risks. So they decided that partnership is the way to go. And for each of those corporations, PVI would take part in, to start with 1% of their partners' treaties, and vice versa. The partners can participate in 1% of PVI treaties. So this is also the way for PVI to learn about the local markets in those countries before it can expand profitably in the future.
And the article also touched on Petro Vietnam's divestment plan for PVI Holdings.
Yeah, so that was a very interesting part of the story. Actually, PVI Insurance started as a captive insurer to Petro Vietnam, which is the biggest energy company, state-owned energy company in Vietnam. So that's where PVI started, and then since then they have really expanded into a full-fledged insurer. And Petro Vietnam, there have been reports that Petro Vietnam is looking to exit its investment in PVI Holdings, technically. This is part of a mandate from the Vietnamese government for state-owned enterprises to exit non-core businesses currently PVI Holdings, which is the parent, is 55% owned by HDI Global, the German insurer, and Petro-Vietnam owns a 35% stake. So I think because it's a state-owned entity, Petro-Vietnam is still evaluating the exit process, and they're going through a valuation exercise. The chairman thinks the Petro-Vietnam's valuation exercise will be done by the end of this year, and there will be a decision soon. Something that he added was that HCI Global is interested in consolidating its shareholding within the company. So we'll hear more on this by the end of this year, I guess.
Yes, there will be a lot more on this story, and I'll be following up on this.
Great. So moving on, Andrew, we've had some updates on the recent Air India crash. I know you've been following this quite closely. What's the latest?
Yeah, the report released over the weekend by India's regulators really throwing the cat amongst the pigeons here. This report, which was mandated to be released, I think 15 days after the crash, as part of kind of international best practices, this has pointed to a problem with the fuel control switches. The report says these were turned off during takeoff, which then cut off the fuel from the engine. Now, this is for the first time raised the real possibility of pilot error in this accident. Now, any suggestion of pilot errors caused a lot of debate and some anger from certain parts that the pilots could be at fault here. The big thing is we don't know. This is probably going to take at least a year for the final report to come out. Again, this is part of international best practices. But what has been made clear, what has been reported that we've picked up on, is the fault is unlikely to affect the claims from the insurance perspective. Pilot error is not usually a named exclusion. This has been reported. So, and in fact, claims could be higher if, in fact, it is a maintenance or technical staff who've caused the problem here with these switches. So we're going to have to wait and see, but this is an interesting development this week.
Interesting. So it will not have an impact on the losses and the impact on the insurers. Staying on aviation, last week we had big news coming out of Australia. Qantas, the country's biggest airline, was hit by a cyber breach, which has become quite common in Australia. It continues to be a problem in Australia. So, Joana, you were hot on the heels of this story, speaking to underwriters and brokers in Australia, Singapore, Hong Kong, and in the UK. What can you tell us?
Yes, so I had some late nights chasing these stories, reaching out to 40 underwriters and brokers across the region to find out who are the players in this case. So MASH is the broker for Qantas cyber cover, which is placed via a London-based broker facility. And AIG is understood to be the lead insurer on the program. Early estimates of insured losses by cyber brokers and underwriters in the region is up to $26 million, including breach response and notification costs, of course, if the policies are triggered. Long-term costs, including, possible fines and penalties, brand damage, etc., could be upwards of $169 million. So you can see that the scale of the losses may not reach the level of Qantas data breach incident in 2023, which saw, data of around 9.8 million customers stolen.
What do you think would be the impact of this event on the broader pricing, which we know the cyber pricing has been softening, especially in Australia? Do you think this event will have an impact on that?
Yeah, so we have divided opinions on this. Some people say that because of the high amount of cyber liability losses in the last 26 months, cyber premiums are expected to increase after this event. However, others say that markets is still soft with plenty of capacity, so this will not have much impact on the pricing.
So, Joana, when do you think we'll have some clarity on the impact of this event on pricing for cyber?
My educated guess would be the next renewal. And it's interesting to see how a big brand like Qantas and also their reinsurance renewals would be impacted by this cyber breach as well. So, yeah, I'll be chasing this story.
Right. I mean, knowing Australia, there's potentially the likelihood of some class action suits against Qantas. We've seen that with Optus and some of the other events. Staying on Australia, I think, Andrew, you've become our Australia-New Zealand cat expert. There have been some events, there have been some updates on the cat events. Tell us about it.
Yeah, the interesting one was a quarterly update from the Australia Reinsurance Pool Corporation. This shows that 88% of the claims received by its cyclone pool since it started in July 2022 are related to ex-tropical cyclone Alfred. Now, that only affected Queensland, New South Wales, in February and March this year. So overall, as of March 31st, Cyclone Pool had received over 78,000 claims since its inception 3 years ago, with a total net incurred value of $431 million US. This means $379 million US came from Alfred. To put that in context, for Alfred overall, incurred claims have now exceeded 125,000, totaling $892 million US. This is from the Insurance Council of Australia. So the Cyclone Pool covers cyclone and cyclone-related flood damage to insured residential strata and SME property, and the pool had already been mentioned as being a key factor in mitigating losses from Alfred, as it absorbed much of these insured losses.
Yeah, that was the big test for the cyclone pool in the last couple of years. There's been quite a lot of debate about the effectiveness of a public risk pool. Seems like it's working this time around. Also, it's been a busy time in New Zealand from a cat event perspective. There's some events this weekend. It seems to be a bit of a trend in New Zealand that every weekend they seem to have some climate catastrophe.
Yeah, New Zealand was just kind of cleaning up from a previous storm, and then it was hit again over the weekend. There was a state of emergency as 200 millimetres of rain fell over Friday and Saturday. One of the main areas impacted here is the Nelson Tasman region, and the quotes coming out of here, it's going to take months of cleanup, although more bad news, more bad weather is expected from the end of July and into early August. So New Zealand's not finished just yet.
They can't catch a break. Staying on cat losses, I think, Joanna, we had an update on the Myanmar and Thailand earthquakes that happened in March. There were some numbers from Thailand on insured losses. What's the latest?
Yes, so local media reported that total insurance claims from the earthquake could surge to $1.5 billion US. So far, 150,000 claims totaling over $920 million US have already been filed, with the process expected to continue through September. So you can see that this is a pretty significant loss, right? And actually, a report by Gallagher also said that this earthquake is the third worst costliest economic loss event in Q1 2025, just behind the two historic wildfires in Los Angeles.
So I want to talk about the broader tariff impact on the market. We had a couple of stories around Trump's tariff policies and what that means for the broader industry. In our last episode, we discussed the webinar we were hosting with Fitch Ratings on the broader reinsurance market and the impact of geopolitics on the insurance industry. So it was quite an interesting webinar, widely attended. So one of the key takeaways from the webinar was the impact of geopolitics on the broader industry. While it did seem like, when we were speaking to people in the market during 1/7 renewals, it did seem like there was no immediate impact from US tariffs on renewals per se. But the industry is concerned that there could be more medium and long-term impact on the industry, especially from a capital perspective. So reinsurance as an industry is a global industry, and that relies on free trade flows and ability to move cash across these markets to be able to insure global risks. A move towards protectionism is not healthy for the industry. But one thing that really stood out for me was the comment from John Ju, the chief economist for Swiss Re in Asia Pacific. He said one of the biggest risks, and this is quite interesting, is a potential loss of credibility for US dollar. Now, that was always sort of an academic debate. What happens if dollar loses credibility and, if it devalues? But John mentioned that it's no more an academic debate. The industry is really contemplating what that could mean for them. He said that not just the insurers, the entire financial services industry is probably not prepared for this. And to add to that, there was the big Sigma report from Swiss Re Institute last week. They also mentioned the risks that this geopolitical developments will have for the broader industry. But what's heartening is that emerging Asia will be the main driver for non-life premium growth in the coming couple of years. At least that's what Swiss Re Institute predicts. So while the outlook isn't looking great for the industry, emerging Asia remains a bright spot. Speaking of bright spot, Andrew, we've got some people move updates.
Yeah, this is a bright spot for us. Just before we came on air, specialty reinsurer Markel Insurance confirmed the appointment of Chelsea Jiang as Managing Director for Greater China. This confirms our exclusive report from last month. Chelsea will oversee Hong Kong and Shanghai operations, looking to drive growth and deepen presence of the insurer across Greater China. She will support local and regional teams in executing Markel's strategy, enhancing product offerings and strengthening broker and client relationships. And she's going to report directly to newly appointed Asia Pacific MD Su-Chen Chang.
In this context, it's also interesting to note that Christian Stobbs, who is the Managing Director for Asia Pacific Markel, has just been appointed Chief Strategy and Corporate Development Officer, and he's relocating to the US initially, which sort of wraps up our ongoing coverage of people moves at Markel. That's been the big stories we've had in the last couple of weeks. Now let's go on to the stories that we're working on. Joana, what are you working on this week?
Yeah, so I saw a report by Aon which say that W&I insurance uptake has increased because of M&A recovery and rising claim notifications. You know, key drivers for growth in this market can be like complex cross-border deals, unfamiliar local regulations, and more seller-mandated insurance requirements. So I'll be reaching out to brokers and underwriters across the region to see if this is the case.
Andrew?
Yeah, well, one thing we've picked up on is the Ministry of Ports, Shipping and Waterways in India seems to be getting closer to launching its P&I club. This is expected to be called India Club, and this has recently hit the news as the government has appointed a consultancy firm which is currently evaluating technical feasibility, structure, risk appetite. The final report is expected in the last quarter of this year, and then hopefully we'll get cabinet approval. So to put this in context, India has over 1,500 registered Indian flagged merchant vessels, but it currently lacks a domestic P&I club. Union Shipping Secretary TJ Ramachandran said, launching an India club is not just a financial reform, it's a strategic shield for the maritime economy.
Great. And on my end, I'm planning to follow up on a story that we did last year on the space insurance market. It's quite an interesting story that we did last year. I mean, we did see quite a lot of losses in the space market. I think our story noted that in the previous 18 months, the space insurance market saw losses of over US $1.8 billion, whereas the premium income for the sector in that period was $750 million. So it was a really tough time for the space market. Last time we were doing this story, we were speaking to brokers and underwriters, and they were saying pricing really has to catch up with the losses. So I'd like to follow up and see how the market has evolved in the last 12 months. Great meeting, guys. There's a lot to get on with. Let's break for lunch and back to work. Our guest today is very special. Joining us from Rotterdam is Tom Oostra, Managing Director of MSIG Specialty Marine, which was earlier known as MS Amlin Marine. Oostra joins us to discuss the Mitsui Sumitomo Group-owned specialty insurers, new branding and positioning, and its strategic priorities for APAC. He'll also discuss the broader marine market in light of the emerging risks facing the industry. He's got a lot to say. Have a listen. Tom, thank you very much for joining us today. To start off this podcast, I understand that MS Amlin Marine has been rebranded as MSIG Specialty Marine. Could you tell us a little bit about the rebranding and what that means for your business?
So MSIG Specialty Marine has quite a long history dating back over 100 years. The company was started in Europe and became part of the MS&AD group through the acquisition of MS Amlin, 2015-16, around that time. And we are now rebranding in a more global fashion. So by becoming MSIG, which is the main brand of our group, we are aligning ourselves more with the global entities of our group. And it really reflects a renewed focus on the global specialty marine segment. So it really helps us to position in the marine space, but at the same time work with our colleagues in the group to offer solutions everywhere we are. So, for example, in Asia, we've been focused on the P&I market primarily. So fixed premium P&I, owners P&I and charters liability. And for the last 25 years, because we are celebrating our 25th anniversary in Singapore this year, which is great. Yeah, we have been focusing on claim services, but from the 1st of September, we will also start underwriting in Singapore. And we will do that in collaboration with our group company in Singapore, MSIG Singapore, who will be the main carrier for us in Singapore.
So congratulations on the rebranding. And broadly on the business side of things, you said you have an office in Singapore. What are the strategic priorities for you in Asia Pacific, and what's your sort of market positioning?
I will start from our origins again. I mean, like many classical underwriters in the marine market, we are obviously underwriting cargo, but this is more for MSIG Specialty as a whole. But we are specializing in a few specific domains that are not underwritten by every type of underwriter. So, for example, in the hull segment, we are one of the few global leaders on the builder's risk segment, so the construction of vessels. And we write a lot of special craft like dredging companies, heavy lift. So a lot of operations are involved, for example, in wind farm construction. And we write super yachts. So we're one of the few global leaders in the super yacht domain. Those are aspects that we underwrite globally. Our focus in Asia has its history in P&I, and that is what we will be expanding together with our group companies in the coming years, as we also seek to expand our geographic footprint and our product portfolio. So a number of segments we'll look to offer globally. But in Singapore, the team will primarily focus on P&I, but they can work with the global experts in the other domains to facilitate product offerings to clients as well. And so I'm really enthusiastic that we can collaborate with our other group companies in Asia, and that we are now be able to make the step to service the clients that we are currently already servicing, but that we can really service them end to end. So from underwriting or their risk management, their loss prevention services. We also run an in-house recovery desk, so we can help clients with recovery on any situation they have. And then we will continue to service their claims around the globe.
I mean, how do you view the Asia Pacific marine market? What are the opportunities for you there? How do you see the sort of trends in terms of pricing, capacity, claims in the region?
So the global marine and offshore energy market is around 39 billion. Which sounds big, but actually it's really small because it only reflects roughly 1% of the global non-life premiums. That means that there is very few companies in the world that really specialize in this domain. There are many underwriters that are really part of a large P&C entity, focusing on property and casualty, and that are not really investing to specialize in marine solutions. If you then look at are there any markets of size in the world where there are only 33 countries where the market is larger than $250 billion of premium. So those are markets where you would expect that there is some form of maturity in the marine segment as well. And together, these 33 markets represent roughly 85% of the global market. And of that, the Asian market is roughly 30% and growing. So the Asia Pacific region is getting, well, I'm not saying dominant, but certainly very important from a marine market perspective. Now, if you think of the global market of 39 billion, the segment that we focus on in Asia's P&I is roughly 4.5 billion globally, and the Asian market is roughly somewhere between 1 and 1.5 billion. But that market is projected to grow by about 10% in the coming years. So not only is Asia already, or the APAC region, a very important region from marine specialty perspective, but certainly in P&I it's projected to grow significantly. I think one of the aspects is that some markets are introducing legislation that makes it mandatory for vessels to have liability insurance. So that really means that the market as a whole is growing. And I think the region as a whole is getting stronger and stronger and therefore a more important part of the global market.
So, I mean, it's certainly a difficult time for marine industry globally. We've seen quite a lot of challenges around geopolitics, wars and, shadow fleets, etc. There's quite a lot of challenges for the industry as a whole. What do you think are the most significant risks facing the marine industry, especially in APAC?
I think one of the global trends is that vessels are getting larger, but also more complex. So your simple container carriers are getting larger and larger. From an insurance perspective, that means there is more cargo on board from different owners. So you have a risk aggregation challenge. And that can sometimes lead to complex loss scenarios. There's also been a trend in the industry that fires on board have been, let's say, increasing over the last years. So if you get a big container vessel that is on fire, yeah, that is a very big challenge and more challenging than it was a few years ago. Also, the special craft that are involved in things like wind farm construction are getting bigger and more complex. And what you see is that the less specialized insurers, so those that primarily focus on property and casualty, really struggle with the increased complexity of these kind of risks. I think in response to the geopolitics, and one aspect that we can touch on later is also the rerouting of some trade routes. But another aspect is that there is quite a massive investment in military vessels. Obviously, you see that in NATO countries, but also primarily in the Asia Pacific region. And military vessels are large, they are complex, they are expensive. Yeah, those are very specific risks to underwrite. And we are active in all those domains. And many of my competitors struggle to service that domain well. So I think the risks are getting larger and more complex. Then you also have some other things that come into it, like, for example, ESG. You see that through new regulation, particularly from an environmental perspective, vessels have to reduce their emissions to be allowed into ports, for example. That is quite a challenge and also comes with complex solutions. Then you see within the supply chains that there's more and more interconnectivity between systems, so the systems in port, but also the systems on board of a vessel. And that introduces an enhanced level of cyber risk. So that also adds to the complexity of the risk. And then you have this rerouting ongoing. I think that the challenges, for example, in the Red Sea, means that a lot of vessels are now sailing around Africa rather than through the Suez Canal. Or the challenges with water levels in the Panama Canal, for example, are a major disruption for trade from Asia region to the Americas. Those make it more complex, and there is sometimes a more need for dynamic, really standing next to your client to be with them on their maritime venture to help them to get a tailored solution rather than a one that you pick off the shelf. And then I think one big challenge, it is true in every region in our world, I think there is a shortage of talent. And you see this in the insurance market, but you also see this in the maritime community, that it's a challenge to have well-educated staff on board of a vessel, for example, so that you have a good team on board that knows about all the procedures and that takes the safety factors into account. And in the past years, we have seen an increasing trend that companies are struggling to have their adequate crew on board. And you see an increased number of claims that have a human error factor in it. Making sure that all the companies that are operating in the maritime sector, that they are training their team, that they are having effective safety procedures is an important factor.
That seems quite a lot of challenges for the industry as a whole. Can I just bring you back to, you mentioned that you cannot have off-the-shelf solutions and you need tailored solutions. I think two points that you mentioned, I just want to really ask you a little bit more about that. One was about your ability to write military vessels that you mentioned. And the other one was about the, sort of green fuel. There's a lot of conversations around hydrogen and ammonia to power ships and vessels. My first question would be about what are the opportunities and sort of specific challenges in insuring military vessels? That seems very often we hear about military vessels I would imagine are backed by the countries. So there isn't a lot of insurance backing them. Is there a real opportunity there?
You're right. When military vessels are in operation by a country, they tend to be uninsured or basically covered by the country. But during the construction phase and the sea trials of those vessels, then the insurance market is providing cover. And I think the challenges with military vessels is that the values can be rather extreme. Right. Not only of the complex one-off designs, but also of the, potentially the weapon systems that are on board. And also the duration of such a construction project can be much longer than of an average trade vessel. So I think knowing what you are underwriting, what are the key dimensions of the risk, making sure that it happens in a high quality yard that has good risk management is very important for underwriters. But also I think many markets struggle if you are underwriting a risk that is 10 years in duration. Yeah, that is quite a long period to oversee. And not every underwriter in the world can cope with those kind of complexities. So I think for MSIG Specialty Marine in particular, because we are so specialized in this domain, we often will have those shipyards that are building military vessels already in our books. So we know the yards well, and we will get involved early on to judge the new project that might come on, so that we can work with the shipyard to eventually arrange a specific solution. And sometimes governments are participating in the insurance of a construction of a vessel, but actually the market has enough capacity to cover significant military vessels.
And on the green ammonia and the greening of shipping as a whole, do you see emerging challenges from that from a risk perspective?
Yes, I think not every vessel has the ability to take the measures required to basically have lower sulfur emissions. So it does mean that there is a category of vessels that is just not worth to invest in anymore, and that will either be sailing in an area of the world where, let's say, there are less requirements, or potentially they will need to be scrapped. On the other hand, the vessels that are going to be invested in either by using different fuels, I think, and scrubbers, for example, I think that development has gone relatively well if you look at it from a bird's eye perspective. But you also see a lot of investment, indeed, like you said, in new type of propulsion techniques or in fuels like hydrogen. We've also participated in some projects that involve even putting sails on trading vessels. They are not really sails, right? They are usually just made of steel, but they are used in or eventually to help the vessels go forward. And we even have some owners in the world that are considering to go nuclear, so to power their vessels in a nuclear way. That is a relatively new development. I'm not really sure how that will play out in the coming years, but we will make sure that we stand by our clients in that development and seek if we can assist with solutions. The underwriting of, biochemical nuclear risks is very complex in the global insurance market. So if there is a move of some owners to move to nuclear way of powering the ship, to me, that sounds really challenging. You saw some news articles from big shipping companies on it earlier in the year, and I'm quite curious, actually, myself, how their plans are going to evolve and how we might be able to assist them. Today, I don't even have the answer to it, to be honest.
Right. Okay, so that is to be seen with all the new technology coming. I mean, Sharmin, you also mentioned shortage of talent, and that's something that we hear quite a lot with all the insurers in Asia. Obviously, there's a massive demand for talent. I was curious to understand, what are your sort of expansion plans in terms of new markets, in terms of business in the region? And do you have plans to expand your footprint in Asia, add more talent?
Yeah, definitely. So, firstly, I already mentioned that we plan to start underwriting from our Singapore operation, which means that we will be growing the team. From the 1st of September, there will be 3 underwriters starting to work for us. They will gradually come in the 4th quarter. At MSIG Specialty Marine, we are a bit of a global community. It's 210 of us, and a lot of us are experts in our own little domains, and we spend a huge amount training each other, so that the knowledge that we have together is available everywhere. We run a marine academy for that internally. And we publish a lot of white papers, for example, in the market, and participate in industry forums. And by that way, we not only draw knowledge in, but we also try to give it back to the market. And we also organize courses for the broking community. It's for brokers also a very micro niche. So it's really beneficial if they get extra knowledge through trainings that are delivered by experts in the market. So in Asia, we will be growing our team. Initially, the first step will be that we start underwriting in Sing, and we will look to gradually extend our knowledge base and invest in our team so that we can be alongside our clients in the entire value chain of their maritime venture. And at the moment, it's primarily focused on P&I. But as I said, globally, we are present in all the other main segments, in the hull market, in the cargo market, in the liability market, and we will look to assist our clients along the way of their journey.
So you could potentially bring some of those lines to Asia in the future.
Yes, or we will work with other group companies that are significant players in that field. For example, in the Singaporean market, MSIG Singapore is one of the major players in the cargo market. We are collaborating with them to share knowledge, to support them from a capacity perspective. And FCI is one of the major hull underwriters in the Singaporean market, or actually in the region, I should say, and where possible, we cooperate with them as well.
If I may ask one last question, are there any specific markets in Asia that you find very interesting? I know you're based in Singapore, but that's most. I mean, Singapore itself is a big marine market, but beyond Singapore, are there other markets that you find very interesting?
So we currently have a sizable portfolio from various markets in Asia. Indonesia for us is a big market. Malaysia, Taiwan, Vietnam, Thailand. And also we have quite some business in South Korea. So I hope that we can keep developing the partnerships with the client community, with the brokers in those markets, so that we can keep developing our portfolios. I think if you think about our Asia portfolio, in all honesty, in a global context, it's not big, it's rather small. On the other hand, it's in a specialized domain where there is not enough knowledge or capability to deliver the solution to the insured. So often we collaborate with other insurance companies. We write, for example, builder's risk on the South Korean peninsula, and we are working with domestic insurance companies in support of those solutions. So I hope that more and more partnerships will develop in the coming years, so that we can share our expertise, but also our capacity.
Great. I hope you can build more partnerships around the region and bring your niche expertise and skills to the region. Thank you very much, Tom. It was fantastic speaking to you, and thank you very much for your time. Really appreciate it.
Thank you very much.
All right, folks, that's all from us in this episode of Between the Lines. We'll be back again in 2 weeks. In the meantime, you can connect with us on LinkedIn. We've got a community of more than 30,000 people and growing. We'd love to see you there. Make sure you're subscribed to our daily and weekly newsletters delivered straight to your inbox. And of course, we'd love to hear your feedback on the podcast. Email us at editorial@insuranceasianews.com. I'm Mithun Varkey. Thanks for listening.